Hello traders, Gary Wagner with the WFGForex.com, your daily market update for Forex Gold. It is July 18th. It is Sunday here in Honolulu, Hawaii. Of course, Monday in Australia. Forex markets have just opened, and this is the daily report. Forex Gold currently trading 1193.16. I wanted to give the Forex some time to trade so we could get an idea of what we're looking at. Of course, I am expecting a quiet day, but here's what I'm looking at. As we have been talking about, I currently believe that we are probably coming to a conclusion of this corrective wave A here. Now, what I've done is I've actually put up two sets of Fibonacci numbers or retracement numbers. The one set you guys are familiar with, it is simply drawn from the bottom to the top of this last fifth wave. When we do that, we get our zero, and then we go through, and as you can see, this 1186, 1187 is that 78% retracement level. Now, the second Fibonacci retracement sequence that I brought in was, if we're looking at it from the beginning of wave one, in other words, the large picture. And then what we want to do, there is a theory called Fibonacci harmonics, in which you look for particular retracement numbers that are close together. And where they're close together, you will tend to find very, very strong areas of either support or resistance. So, for example, right in here, as you can see, we have a 50% retracement level and a 23% retracement level. This 23% retracement level is off of that long Fibonacci retracement from 1040 to 1265, and you can see they line up pretty good. The other two that are very, very close, of course, are right in this area, and this is our short-term 78% and our 38%, which is the longer term. Now, my sentiment is that these areas should provide good support, and of course we should have some superlative resistance in here. We've absolutely seen the resistance in here. As I said on Friday's report, we absolutely had 3 attempts to come close and to exceed those points, but on all 3 attempts we were unable to do that. 2 of them forming those double dojis, which I felt was a pretty ominous market call, and therefore I was looking for a continuation for the market to sell off. At this point, because of these 2 levels here, I believe that it is in fact possible to find support anywhere between 1185 and 1180. We'll have to see what pans out through this trading week. The next level absolutely is going to be a full retracement to 1165, which is this low here. As you can see, I've kind of shrunk the chart down so that you can take a look at where these Fibonacci numbers are coming from. I showed you, of course, this one here and here, and then the long-term Fibonacci that we were looking at, of course, is coming off of this low here. This, of course, is the beginning of that wave 1 and the absolute top here. And that's going to give us really some very, very strong and very, very long-term indications of where the market might in fact go to. And as I said, these are our 2 critical areas right in here, and this is where I think we'll find some tentative support, and then our resistance areas right in here. That's what we're going to need to break out above to see the market begin to form any kind of support and move to higher highs. Now, in terms of what I'm looking at, my belief is still intact that we are in a full-blown correction. So, what might that look at? So, that whenever you're coming off of a long impulse phase, as we've seen, taking the market from 1040 to 1265, our impulse 1, 3, and 5, our corrective waves 4 and 2. This begins that first of that corrective cycle. In terms of a correction, we're going to have an A, B, and C wave. I would, if this in fact will become the bottom, and I think there's a decent opportunity, mostly because I do see some support in this area in terms of our Fibonacci retracement numbers, then we would see a wave up which would be the impulse wave. That would be our B wave. I would look at the high possibly at 1224. I don't think it's going to have much more room than that. The next point, if it did continue higher, would be 1239, but I personally don't see that at this point. And then one more wave down. There's two possible scenarios for those waves down in the most common types of corrective waves, which would either be what's called a flat or a zigzag pattern. So we'll first look at a typical scenario in a flat retracement. If this in fact is the bottom, and we still have a little ways to go to find out, but I think that we might find some support, we will see our next, as I said, impulse wave within this corrective, and let's assume that it does take us to 1224, somewhere in that area. At that point, in a true correction, we will have yet another wave down. On a flat wave down, it would look something like this. It would come to about an equal low as this A. So you've got A, B, and C. And then at that point, the good news is for us gold bulls out there that we would go back into our impulse cycle, which would start the signal and patterns all over again. Our first wave going up, which would be our wave 1, 2, 3, 4, and 5. That's the first scenario. The other plausibility, of course, is what is known as a zigzag pattern. On a zigzag pattern, it's very, very similar. You get your A wave down, you would get your impulse, and I'm going to assume that on the impulse it comes to the same area. As I said, we would look at either the 1224 or 1239 as the two targets. But on that C wave, you get a final wave, and that gives you a lower low. If it comes and matches, let's say the 1165, that would take us here. I would look for this area for support, and then at that point, we would then go and enter our impulse phase, waves 1, 2, 3, 4, and 5. So what are my recommendations? Well, I absolutely see a couple of opportunities here. First, we are going to look for a couple of matches. We've got first, a Fibonacci retracement number that lends itself to some potential support. We have had a good wave A down, and the third thing I would look for is going to be a candlestick signal, a bullish reversal signal that gives us a buy opportunity or an opportunity to go long this market. The second thing that I would look at is if in fact this is going to be short term, and if in fact we are looking at a true correction, then this particular trade here, we would look very, very closely at how it reacted at 1120 to 24. That would be our first area. If it was able to break through, especially at the 1239 area, and at that point, what I'm going to look for is an actual reversal in the market. So we would look to implement a strategy of not only exiting our long position, but also taking a short position in the market if the market wanted to come here, or if it was a zigzag and actually matched this low here, it would be even more of an opportunity. At that point, with these two trades in place, the last thing I'm going to look at is if we go back into our impulse cycle to begin accumulating positions in the market, because we're going to have 3 nice waves up. This has been Gary Wagner for WFG4X.com, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.